Hello everyone, it's H here for Counter Capital, and on today's video we're taking a look at Polygon or MATIC macro picture. This chart is from crypto and this is very high time frame, currently on 2-day, ranges from the 2019 lows that is established into all the highs that we had in 2021. Again, similar to Link, we had a high here on around the end of 2021 instead of May 2021 like we had on some altcoins. But before getting further into this whole thing, if you like these videos, show us the appreciation by clicking the thumbs up on the video as well. And if you're interested in anything else, check out the description. But let's get right into the video and get right into with these few counts that I got prepared. One bull count and one bear count overall, but let's establish the scenarios first. The first scenario is that a 5-wave structure is done. Now, in this way, it is very easy to label a 5-wave structure in here with a decent divergences here, with a diagonal here at the end for that 5th wave, creating a new top in these highs around that December 2021. Since then though, we had a very deep structure coming down that looks to be in 5 waves, which would tell that, okay, whatever this top is, this could either be the start or an end of something new. So with that in mind, we can create a couple of different scenarios where this is either the start of something, meaning a more bearish count, or the end of something, where we are talking about more of a bullish case. So let's take a closer look at the bear case first, and then I'm going to be explaining the bull case on this one. In here, the idea would be that if we topped here, we would be looking to start something new to the downside with a 5-wave structure that always can be either only a wave 1 or wave A. Then we would have a 3-wave pullback up into the highs around February 2023, and that would be a wave 2 or wave B. Again, we don't know what this would be, but this is the bearish scenario that we have. And then there is a way to label this as another 1, 2, 3, 4, 5 coming down with divergences at these 3 and against with a divergence between the 3rd and 5th wave of this potential wave 1 of that either C wave or 3rd wave. Now this is very bearish count because we are stacking up these 1, 2s here, and at least overall this would be a 1, 2, 1, 2, where we are targeting that C wave down below. But again, we would need to look for a retracement and look for a short opportunity against the high here that we established around the March 11th, around the $1.3. And again, this would be giving us a very decent risk to ratios if we are targeting anything beyond here, beyond the low that we had on June 2022. But again, we're currently on log scale. Arithmetic scale is going to be looking a bit different, and this is what it actually is giving us, the risk to ratios. So we can't really be shorting too low, because again, the log scale here is distorting the price of what we are actually trading. So again, we can't really be shorting, because again, the risk to reward ratios are going to be really bad if we do that in too low a price. We need it to get higher, and that is what is going to be giving us a good risk to reward ratio. Also, what would be better is look for another push to the downside and trade this setup here instead. So you would be doing something like this, and of course not targeting that low, but maybe even here, this previous low, as a midpoint, as a take profit. Now, if this starts to roll over, then good things happening for this one. The only thing that I wanted to point out is this area of interest here around 4.5 cents, which is the top of wave 1. Now, how does this matter, or why does this matter? This is because, again, for the bull scenario, this is an invalidation point. So let's take a look at that invalidation point next. So why is it here? It's because of this scenario. If this is a wave 4, or the wave 4 is not established yet, coming back to wave 1 confirms that it is no longer a wave 4. But that is the only option, or the only thing that happens here around that 4.5 cents. But again, this bull case is not expecting that at all. Now, as we have come back through here, again, we had this 5 wave, and because we are thinking of a bullish scenario here, this is this end of summon, and it fits really well to have an expanded flat here. What and when does those happen? Well, generally on wave 4s. We have alteration between this here, which is a double zigzag, a WXY, so a variation of zigzag pattern. So that's going to be different than what we have here, which is expanded flat. What else is good about this count is the fact that this structure came back to previous consolidation, which again in our counts is going to be a 1, 2, 3, 4, and 5. So a previous lower degree wave 4. That is generally where a wave 4 of higher degree is actually going to be finding some kind of support area. So again, that is very interesting and very good area to look for. Now, again, this is the log scale version. If we're looking at arithmetic, it's kind of weird looking, to be honest. Can be an ABC of anything, but again, I feel like we need to be using the log scale just to get the pictures right. Again, mentioned as well that wave 4 might be not over, and this whole thing might become a WXY or an ABC if we sweep out the highs here and then create a 5 wave here, not taking out too much of the price action below here. But again, the invalidation for that whole idea that wave 4 would not be over is until we break this high. But yeah, that is the bearish, the more bullish macro version of this count. So let's zoom in on these and look at more of the local count, what I can be thinking of. Now, a couple of variations again on this one, where we have a wave 1 or wave A. Again, if we were thinking about this structure as a full, it would be a 3-way structure. So we have to be thinking that maybe this could be something else. Of course, there's a possibility where this is some kind of diagonal. However, at this point, as we have retraced quite a bit for this wave 2, it doesn't really look like it is too much of a contracting diagonal, unless we just do something like this. But again, this previous high did not even take out this, so we would have to have a 3-way structure in here to even have an opportunity for that diagonal to happen. And overall, diagonals are less likely to happen as well, rather than just a corrective structure overall. So again, that would be lower probabilities overall. But for this one, again, thinking that it is a potential wave 1 or wave A, looking for a 3-way retracement here, with this being again a 5-way structure, with this divergence in mind, having this fit a C wave as well is really decent. So again, thinking about that, what makes it more probable, or what does this time actually that was used for the second structure mean? Generally, is that wave B is more probable because it took so much time in comparison to this wave 1 here. As you can see, this wave 1 or wave A is very short in time. So generally, when we take it anywhere close to this kind of amount of time, it is more often than not a wave B. However, as we have not taken out even the high of B and have not taken out or got into the 1-to-1 extension, I don't think really that this is a very good potential for topping this yet. So because this again lingers like right in between the 618 and 1-to-1 extension, it generally means either that this is not the count or that this structure here is not finished. Now, what can we do about this is we can be trading this upwards. In this idea, again, we had the bottoming structure here for wave B. In my thinking, that is more probable. Then we would have another 5-way structure up. We have divergence here, but again, for the bears, this would be a 3-way structure as well. So both fit decently well. Currently, we came down in 3 waves. However you want to be labeling this, whether it's a diagonal or just a ABC with some weird structures or whatever you want to be having it as, a 3-way structure fits really decently well. We even pivot it in here. We never got that 4th and 5th wave here. It is possible that we still do this, and then we could have this as 5 waves, but again, that is more towards the bearish scenario. What we want this to do is create a structure where we are not really taking out the lows that we have, create a potential 1 2 1 2 1 2s, and then we just continue up in very fast momentum. It could be just a diagonal that, like I showed you, but again, we don't really want to be taking out these lows if we want to be bullish. The real invalidation for this whole idea is these lows that we had on September, around, let's see, what is that, 49 cents. If we go below that, then this whole structure is, or whole idea is invalidated. If we, however, take out the 1.29 area, then we are no longer turning that bear count on. So those are the key areas to look for, these highs or these highs. And yeah, those are the ones that you want to be trading against. Currently, what I would be trading against is probably some of these lows here, or you would be calculating your position size against this low and setting your alert a bit lower maybe, or you just want to be getting on and hopping on the trade already, because the risk to reward ratios are really decent here for the bull scenarios. Bull scenarios are expecting higher prices, so you can see the risk to ratios are really good here already. But more of those signals coming up if you're in the Discord, and if you're interested in lower exchange costs, check out our partner BitUnix. But that is again everything I wanted to share with MATIC for this time. Thanks for watching, and again, catch you on the next video. See ya. Bye bye.